Knock, knock, knock. Knocking on the doorsteps of $3.8 million in the public count, folks. Look at that. Public count up another 28K here today. What a time, man. What a time. Congratulations to everyone watching this out there, breaking records, hitting new milestones in your portfolios. All the people that it seems like every day you wake up, you make thousands, tens of thousands, or hundreds of thousands of dollars. Congratulations to all you guys out there. And it's a long list to you. We have stocks making big moves. AMD up another almost 4% here today. I was up over $16,000 in the public account alone. Nike, another $6,700 up for me today. That one's up 3.5% roughly. Estee Lauder, this is another forgotten stock, up $3,800 for me in the public count here up today, about 2.4%. We're going to speak about what's going on with some AMD. We got some big news out of AMD here today. We'll speak about Nike, Estee Lauder, what's going on with those sorts of stocks, okay? Wall Street, they're moving their price targets all around right now. We'll speak about what that is, what that means for the market, all those sorts of things, okay? From there, we're going to go ahead and I want to share a message that I sent out to my Pret Stock Group members this weekend that I think is very, very important to address. And then I want to go ahead and react to this clip here from the halftime money report today, Fast Money halftime report. I'm looking forward to reacting to that one. I actually had a drive from Savannah, Georgia this morning to Charlotte, North Carolina. So I'm now in Charlotte, North Carolina for the next few days, and then I'm going to be in Manhattan for about a week. So I'm all over the place, and I'm still trying to keep you guys in the loop on all this because I know a lot of you guys want to know all this stuff that's going on. So yeah, a lot to react to here today. One thing all I need from you guys is to hit that thumbs up button. I hope you can do that for me. I'm recording videos in hotel rooms, Savannah, Georgia, now Charlotte, North Carolina. I'll be recording videos for you guys in Manhattan. Only one thing I need is you to hit the like button, man. I hope you can do that for me. If you want to subscribe here to the channel, you can certainly subscribe. I think we're around 103,000 subscribers here on the reaction channel, somewhere around there, okay? Alrighty, guys. So, first off, AMD, Nike. Well, what's going on with Nike and Estee Lauder before we get into AMD, okay? Nike and Estee Lauder are continuing to benefit from the fact that people are looking for places to invest that is outside of just like the Mag 7 type stocks. They're looking outside of that, and what do they see? They see some opportunities and some turnaround plays like Nike and Estee, and so those ones continue to, they're outperforming the market on such a ridiculous manner on a day like today. Like the market's hardly green, and yet Nike and Estee are just playing their own game, a fun game at that, right? And then as far as AMD, what's going on with AMD here? Well, here's what's going on with AMD. AMD jumps after reported plans to raise prices on the Instinct MI350 AI chips. These are the ones that just hit the market here very recently, okay? As in the last couple months, they just got into production. Shares of AMD rose about 4% on Monday after this analyst reported that the company is thinking of increasing the price of its MI350 AI accelerator to $25,000 from $15,000. The nearly 70% increase in average selling prices is still cheaper than counterpart product from tech giant NVIDIA's Blackwell B200, the report cited. AMD did not reportedly respond. The price increase indicates that AMD is seeing demand for its AI products, and it also suggests that such a high increase shows that the company's quarterly revenue numbers may reflect notable growth. Oh yeah, baby. In terms of performance, the Instinct MI350 AI accelerator is claimed to rival NVIDIA's Blackwell B200 AI chip, and it has been a leading offering by the company. Following the news, Wells Fargo analyst Aaron Rakers reiterated their recent positive preview in which they increased their AMD data center graphics processing unit, or GPU. The analyst added that the key focus of AMD's upcoming fiscal second quarter results on August 5th, coming up soon, guys, really soon, as in, what is that, next week, roughly, will be the pace and breadth of the company's now ramping MI355X data center GPUs, which began shipments in June. We think most investors have been considering MI355X list pricing in the $30K range, said analysts. Rackers and his team noted that AMD has highlighted confidence in returning to year-over-year growth in GPU revenues in the fiscal third quarter of 2025. The analysts currently model about $1.65 billion in fiscal third quarter 2025 revenue, up slightly year over year for the model. Here's the deal, guys, okay? At $25,000, that still significantly is undercutting the price point from my understanding of the B200. The B200, from my understanding, is priced well into the 30s, okay? So even if they went to $25,000, like, I'm fully confident that these companies will very happy to pay that price. Because at the end of the day, you got to understand, NVIDIA, for some of their recent AI chips, they've been getting $45,000 to $50,000 per. So even at $25K for something that you could see as way better performance than what you were getting last year for $45 or $50K is very attractive. And so, as I told you guys, a lot of times people think that NVIDIA and AMD are enemies, okay? Listen. Before we go any further, I need to address this point in a massive way, right? Listen. NVIDIA is AMD's best thing to ever happen. And the reason being is NVIDIA set the bar so high in terms of performance and in terms of price. Now AMD's coming in and now meeting that performance. Some ways you can make an argument that they're beating performance in certain categories, right? But they're beating price by quite a margin. And so even if you're at 25K, they're still undercutting big time. This is very, very attractive. And this is what is just one of many factors why you're going to see AMD's revenues and profitability skyrocket over the next few years. And I don't think people are even prepared for the type of net margins AMD is going to be producing just 1 to 2 years from now. I'm not talking 5 years from now. I'm not talking 10 years from now. Wait to see the net margins AMD has at this time next year. And then wait to see the net margins that the company's going to have 2 years from today. Oh my gosh, get ready to get your flapjacks flipped. The margins, the net income, the revenues, it's going to look like a completely different company than the NVIDIA you've looked at over the past few years. It's going to be hard to recognize because they're about to go through their major growth cycle like NVIDIA went through. Like NVIDIA, if you look at NVIDIA's revenues now, you look at their net income now, you look at their margins now versus where they were at 2 or 3 years ago, it's like you're not even looking at the same company. That's exactly what we're going to see play out with AMD over this next couple of years here. And so you look at that stock and it continues to show price momentum. I don't think this is going to slow anytime soon. Like, once they come out with that guide, which I think their guide is going to be incredible, could we see AMD 200 plus after earnings? I wouldn't be shocked at all. What do you think you're going to hear from Microsoft, from Meta on their earnings? They're going to be spending, right? And that's going to benefit AMD more than anybody out there when it comes to new spend. I mean, the amount of new spend for this MI350 series for AMD over the next year or two here is going to be insane. And then, guys, we haven't even got to MI400 series yet. Wait to see the price tag on that baby. Wait to see the volumes of MI400. We're talking about a whole different stratosphere in terms of performance based upon what I've heard from Lisa Su so far. So, this is just a very, very exciting time to be an AMD shareholder. And I think we'll look back a year or two from now and be like, we'll look at what AMD is today and we'll still be saying like, wow, can you believe AMD was only like $170 back then? That's my opinion. Because at that time, like, we're not even talking about an AMD stock prices anywhere remotely close to that. Now, in regards to, when you look at the company from a perspective of the PE ratio now, it says 50, but this is based upon what analysts have as their consensus kind of estimates here. I think they're going to blow numbers out of the water so bad that I think we'll be looking and that forward P in reality is way cheaper than it is. I wouldn't be surprised if the real forward P is in the 35 to 40 range right now, which is way too cheap considering how much growth AMD has over this next few years, folks. So the AMD party, it's a fun party, and it's still got a long way to go in regards to this party. So yeah, man, happy camper in regards to AMD. Now, what's going on here with analyst price targets from Wall Street, right, on where they see the market going? What does this mean for the market moving forward, okay? And then we'll get into a message I sent my private stock group members that I think is really important. So here's what's going on with Wall Street. They're pulling clownish behavior, okay? Does it surprise us? No. But here's what's going on. They initially went into this year very, very bullish, right? S&P 500 year-end price targets, they had them all nice and high. And then all the tariff stuff happened. They all freaked out, and they, basically crashed their price target expectations, right? Boom. It was a whole situation that had to play out, and it is what it is. And now guess what? They've all brought them back to right around where they were previous. Now, they might actually have a little bit more to climb here because some of these guys are lagging, like JP Morgan, Barclays, HSBC, Evercore. Some of them are lagging. Even RBC, Citi, Bank of America, I think these guys are all going higher, especially after we see the Meta earnings, Microsoft earnings. see those AMD earnings, I think they're going to have no choice, and you don't have any black swans that happen in the next couple of weeks. You're going to see all these Wall Street funds have to bring up their price targets, their year-end price targets. I think they're just waiting to see Apple, Amazon, all these companies' earnings, and then they're going to go ahead and boom, boom, boom. So is Wall Street being Wall Street? And so could we see more momentum still coming in the market in general? Sure, because these Wall Street funds will have to continue to bring up price targets. And we know, like, a lot of fund managers, a lot of high net worth individuals, they make their investment decisions, as silly as it is, based upon what Wall Street's saying. If Wall Street tells you the S&P 500 is going to 7,000 by year end and you're at 6,400, they say buy. And then people go buy. It's ridiculous, but it is what it is. It's part of Wall Street game, okay? So that is that, right? Now, I sent in my private stock group a message, the other day, and this is exactly what I'm starting to see a little bit on the retail side, because I always like to hold Wall Street accountable, but I also going to need to hold retail investors accountable. My biggest fear, right, in terms of this market and, how much money there's been to be made the last, 2 or 3 years now, it's just ridiculous, right? I mean, look at the public count. The public count was $1.1 million, 3 years ago. And now look at the public count, it's, approaching $3.8 million. Like, what a change. But what happens is people start focusing on short-term stuff, and they start going away from the thing that made them all the dang money, the long-term strategy, and focus on these companies a long-term. And so what I've been talking about that I'm very concerned with from the retail crowd is these folks are going to start to gravitate toward speculative stocks, like altcoins, right? We witnessed back in 2021, people gravitated towards spec stocks, altcoins, NFTs, right? Other sketchy stuff in general. And I'm starting to see some of this. I said, Andre sent me this. Remember I told you guys people are going to start blowing all the money they made from great stocks on dumb stuff like spec stocks, altcoins, things like this. This is a perfect example. This guy moved his money out of long-term investments. It's going to focus on algo trading. Like, this is the type of stuff I'm worried about, man. I'm so worried about this with you guys. I'm so worried. And, the problem is it's not even going to be my the people that really watch me as much that are going to fall into this trap. It's going to be a lot of the people that honestly had maybe, let's call it, gambled on some stocks the past few years, right? Maybe in 2022 they saw Meta was really low, so they bought some Meta. They saw Palantir was really low, or SoFi, or other stocks, right? Last couple of years, and they threw some money around. They didn't really know what they were doing in the market, but they threw some money out there, and then they made some money. And like, oh my gosh, this is awesome! Like, just made $10,000 on the stock. Like, whoa, just made $55,000 in this stock. Blah blah blah, right? And when you got these stocks that have returned 300% returns, 500% returns, several 1,000% returns over the past few years, you're gonna have some people that made some serious dough. But what happens is then people get distracted and they start winging it. I'm going to do some other crazy thing now. Consistency is a key. My son, he had a sporting event this weekend, right? One of my children, they both did, but anyways, one of my children had a sporting event this weekend, right? And his issue was when he was warming up versus when he was in the actual competition, every single time the thing he was doing looked different. And I told him, son, like, you can't just go into this big event like this and just be winging it. Like, you need to stick to what works and make sure you execute that perfectly. In the warm-up phase and the next phase, when you're actually in the competition, you can't just be like changing your form every time. Like, it's not going to work. This is what happens in investing. People find something that works. Like, oh, dang, I just made a bunch of money in the stock over the last year, 2 years, 3 years. And then they start, like, doing different stuff. Like, oh, now I'm going to start buying companies that don't make any profits. Now I'm going to start putting my money in altcoins because that's the hot money's over there. I'm going to start doing algo trading, whatever. And what ends up happening is people then blow all their money. And you know what happens after they blow all their money? One of two things happen. One, they don't come back to the stock market. They leave it forever. Or two, they come right back to long-term investing. But only after they spent 2 years wasting time and wasting tens of thousands or hundreds of thousands of dollars. Some situations it's millions of dollars lost by trying their other crazy thing. And if the problem is, at first it works. That's the worst part. At first it works. First, like, few months of doing it, like, oh man, this is awesome. Like, this thing's making me money. And then comes the reality. Because then, you know what happens? A bear market happens. and people get absolutely wrecked. Especially that we're doing speculative things and not investing into great, solid companies and things like that. They get obliterated. And so they end up leaving the market forever, and then they come crawling right back to Papa, long-term investing. And so I do not want this to happen to you guys. Like, this should be a time period. Right now, the time period we're going through, you guys have made so much freaking money, it's ridiculous. This is a time period when you need to take things more serious. Not like, let's alter the plan now. Let's just start doing other crazy stuff. Or you will be watching a video from me a year or two from now, and I'll be saying, I told you so. Because people will go through some sort of bear market, and the people that are swimming naked are going to find out. And they're not just going to go down on positions. They're going to lose entire portfolios. They're going to lose everything. They're going to go down 80%, 90%. It's going to be awful, tragic. And then, the ones that are in great companies, great investments, we're going to make it through just fine, right to the other side, and then be right ready to capitalize on the next bull market, just as we were able to capitalize on this last bull market, right? And so I don't want you guys to do that crap. Like, you need to, if you've gambled money in the market and you haven't really known what you're doing on a high level and you've made a bunch of money, great. Let's take it more serious. Let's take it more serious now. Join my private group. Get around other high-level investors. Get access to all the course curriculums. I can teach you the whole game. You want to be taught the whole game or you're not. Otherwise you're going to be swimming naked out there. Come next problem and you're going to have a big problem on your hands, man. A big freaking problem on your hands. And then you're going to be like, remember in this conversation, you're going to remember this video. Oh man, Jeremy told me, but I was just kind of winging it out there, and I thought, and then you're going to be in a lot of freaking trouble. So anyways, if you want to take things up to a higher level, apply to join private group. That will be the pinned comment down there. This is a time to take things more serious, not less serious. This isn't the time to experiment, screw around, get the highest level software like I have 1000xstocks.com. Get all that, man. And let's get you up to a higher level so we're not sitting here having a conversation in who knows how long from now, right? Where it's like, should have been taking this stuff a little serious, man. It's gonna be sad.
Joe, we begin with records. We know that S&P and Nasdaq just continue to extend them, and the Dow's not that far away either. We're at 44.9. You see it right there. We need to get to 45.073 for an intraday record, and then we can 45.014 for a close. So we're not that far away. And we do have all this stuff ahead of us this week. How do you size it all up?
And by the way, I'm so happy because I've seen so many people taking it serious. I've seen so many people that have gambled money in the market, made thousands, tens of thousands, hundreds of thousands of dollars, and realized, I got freaking lucky, man. Like, I was just watching Jeremy's videos or somebody else or whatever, and I bought some stocks and I bought some SoFi and Palantir and got lucky, right? And now a lot of people are realizing, let's focus up, right? Because you got two groups. You got one, the group that I showed you before that is starting to get really unfocused and starting to get into very speculative stuff and trying, Hail Marys and other crap that doesn't even work, right? And you got the other group that's like, you know what? Let's actually learn how to do this. Let's actually learn income statements, balance sheets, how to properly value companies, P ratios, how all this stuff works, growth rates, what's the right price to pay for a stock versus not. Let's run projections, right? And we have all that in my private group in 1000X. So we have a lot of people taking things to the other level, but we have other people going the wrong way right now. And I'm like, just keep people focused, please, because it's going to end badly.
I look at today's price action, and I think it's consistent with a market that's somewhat exhausted, a little bit tired. I would have expected a more positive response, a little bit more of a breakout, a little bit more breadth in the market. You're not really seeing that right now. So here we go, coming into a critical week. Meta, Microsoft, Amazon, Apple, mega cap earnings. We know about that. I don't think you get much from the jobs report or from the Fed meeting, but can those mega cap earnings lift and extend this market even further? I am acknowledging the fact that it feels exhausted to me. I'm not necessarily sure you could do very much with that comment that it feels exhausted, because I'm not saying sell out of your positions, because ultimately, if we enter a correction, it's really a pause that refreshes. I think more than anything else, it's just set your expectation. Don't be an aggressive buyer up here.
Exhaustion implies something more dramatic than a rest. Like, why would you expect anything different today, I guess is my point.
Yeah. Well,
ahead of everything that we just laid out. What's the market going to make a big move before it gets the earnings, before it hears from the Jay Powell, and before it gets the jobs report?
Listen, you had the news, take it for what it's worth over the weekend with the EU and a trade deal there. The futures last night were a lot higher. It looked like the indication was that global equity buyers were there. They were willing to participate. And that's kind of petered out early in the trading session today. You don't have the broadening out thesis. You don't have the participation from the Russell. So when I use the word exhaustion and you suggest that it could mean something deeper, yeah, I think you could easily fall.
Well, if you're exhausted, you need to go to sleep for a while. If you're just resting, you can get up, you take a power nap, and you can get up when you get
the expectation.
Clarity.
Look, I'm not coming on air right now with the S&P at 6,400 and saying I want to be an aggressive buyer up here. I'm just being very.
I hear you.
You have to be very measured, and you have to acknowledge when it appears as though the market is getting a little tired and might need to pull back.
Because it doesn't really.
So let me be very crystal clear about this. I absolutely love. What do I love? I love the way these Wall Streeters have this approach of being skeptical of the market. I love it. I'm going to get very, very scared about where the market's headed when it seems like all these guys have nothing to say but buy the market. Like, gotta get in. I love that a lot of these Wall Streeters are skeptical of the market. They don't think there's much upside from here. They're concerned, because this is the same vibe we've been getting for a long time now. And I love that. When I feel all these Wall Streeters have nothing but good things to say, it's only bullish, it's only the sky's blue, that will be the moment I start to get very concerned about where the market's headed. And here's the thing. We could end up there within the next 2 to 3 months. Literally, we could. Have all these earnings be great, right? We got a 3-week gauntlet of earnings here. Have the earnings season be great guidance, right? Even more clarity on, finish up the tariff related stuff, right? Have economic numbers be good. Have the Fed signal that they're probably going to start a 25 basis point cut in September. And then the Russell starts to roll heavy. I'm telling you, all of a sudden these guys could be sky's only blue, and then they won't even sound very skeptical and cautious. And that is actually when I start to get very concerned about where the market will be heading after that.
What the impact of all of these tariffs is going to be. What is a deal in rhetoric is a tax in practice. And you might not find out the ramifications of any of that for months to come. So the market doesn't really know what to make of that. The bias is still higher, wouldn't you suggest? The trend is still up. And maybe the events of this week give you some more confirmation as to why that remains the case.
Yeah, no, I agree. I agree with what Joe said in terms of there's really no bull case for deploying capital here in the short term. But I agree with you. I don't think the market's necessarily exhausted now what's going on. You've got a big, heavy news week, and you just don't know how it's going to turn out. So I think if you take the probability that of two events, one being jobs, be somewhat of a non-event unless it's wildly one way or the other versus consensus. FOMC, they're where they are. Sure, you may get some more talk in the minutes that'll eventually come out about let's go. But frankly, the economy's operating fine at these rates.
Yeah.
So what's the big variable, if you handicap it, the most likely to occur? And I think it's possibly that with all the price target increases we're seeing, including today on the three that are going to report.
Well, Meta buy 775, B of A. Apple reiterated buy 275, Amazon target 271.
Here's the deal with Meta, okay? Because you see they reiterated a buy rating, 775 price target. They believe it's going to 775 here, right? Stock right now is, I believe, a little under 720. Given audience scale, we continue to see Meta as one of the best AI opportunity stocks with potential revenue upside as AI capabilities are integrated into the ad stack. Here's the deal with Meta, okay? If earnings come out and they're banger guidance, phenomenal, right? And they don't go too crazy with the CapEx increase, we could start talking about 800 for Meta. And then what's going to happen is somebody on Wall Street is going to slap on $1,000 price target. somebody's going to want to be the first one to put $1,000 price target on Meta. But they got to come out with a banger guide. Don't go too crazy with the CapEx. If they're going to increase, very slight increase, right? Then we'll be talking 800, and then somebody's going to slap that $1,000 in, and that's really going to get the stock moving, because then people are going to be like, "Oh shoot, $1,000! Like, I haven't thought about that." But who's to say Meta's not going there? You look at Meta's valuation; it is so attractive still. You're talking about one of the best companies in the entire world, right? You're talking about a company that pretty consistently beats all their expectations for revenue, EPS. So the forward P is probably in the reality lower than 27. But even if it was the reality of 27, right? For double-digit top-line, bottom-line growth for one of the best companies in the world with one of the best CEOs in the world, would you not pay that? I think you would. Meta's still very fairly priced, or actually undervalued.
And Microsoft target 650, right. That's what you're referring to.
Exactly. So the market's really been, for all the talk of broadening out, this is where it is, right? So if those disappoint, or if they significantly raise CapEx, not a minor raise in CapEx, then you could see the market come under pressure. The odds of the market exploding to the upside for better than expected earnings, given that's already been pulled forward, I think is unlikely.
No, but
so that's the biggest variable.
What may be hanging in the balance more than anything else, and why the market could be resting, you can term it however you want, that's totally fine, is because it needs more confirmation that a broadening can actually happen. Like you get it this week. You get the full combination of everything. You get the mega cap earnings. Do you get more confirmation? I don't know why you wouldn't. That's the trade that's going to continue to run. And do you also, in the same breath, get confirmation that you could have a broadening? Because, depending on what Powell says this week, and depending on what the jobs report is, you could feel more confident about the direction of interest rates and economic growth in general.
I think there's a lot of news coming out this week, Scott, and I think most of it, we have a solid expectation of what's going to happen. Like you just mentioned, the Fed. We have a solid expectation of what the Fed is going to do. Two things. It's not going to raise rates, and it's highly likely to telegraph that September is likely to be when they resume rate cuts. Now, it's debatable, but again, there's a higher confidence that that's what they're going to do as opposed to not. When we're talking about the mega cap earnings coming up this week, I feel that Alphabet was a pretty good tell that both the numbers themselves are going to be good and the CapEx expectations are going to be raised. I don't think that anybody, say, a Meta can now say, oh, I'm not going to match Alphabet. That's crazy. This is a race for the biggest prize ever in corporate history. So nobody's going to say, oh, I think I'll just sit by the sidelines and let Alphabet spend away. With regards to...
By the way, this is something I don't like. I really do not like this at all. This whole notion about these companies are all racing for the biggest opportunity ever. I don't like that. It's like, let's see. Like, I hate when we crown something like the biggest thing ever before it's actually happened. Let's just see. Like, maybe it is a big thing, or maybe these companies are all going to overspend, and a few years from now they're going to look back and be like, dang, we spent way too much in 25, 26, 27. Like, let's just see, man. Let's see what happens here.
Deals, we can sit there and say, hey, we haven't done Canada and Mexico yet. We've still got to do China. But the indications are clear where the direction is going. It's tariffs rates in the mid-teens, and that should be sufficient enough to offset the cost and the deficit terms of the budget bill without cratering the economy. Now, what this all sums up to me, and I'm just going to take what Steve and Joe just said and phrase it slightly differently, the market has climbed the wall of worry. When I wake up today, I look at myself and I say, what am I expecting? The only thing that can come in that's a surprise is a negative. That somehow those deals with Canada, Mexico, and China don't come through, or that for some wild reason, which I completely don't expect, the other mega cap tech stocks this week disappoint. I don't think they will. I think that Joe's right. I don't really know the difference between exhaustion and rest, but what I will say this, seasonally, this is the time of year where weird stuff happens. I ask everybody to look back a year ago where we had a sudden sell-off because of the yen carry unwind, which nobody was thinking about. It came, it passed. We might have some unknown like that, but it is likely to be small, not even a full.
See, and this is also why I'm usually worried about corrections happening, in August, September, those sorts of things. But one reason I'm like, maybe it's not going to happen. You know why? Because too many damn people are talking about it happening. Too many of these Wall Streeters I see and go on CNBC all the time are talking about, oh, be careful, like this time of year, crazy things happen. Remember the Japanese, like, oh my gosh. I feel like it's just too many people discussing it. That I'm like, Is it actually going to happen? Because it seems like too many dang Wall Streeters even talking about it, right? And usually when if too many people are talking about something, it's not going to happen. So, the one stock I'm paying really close attention to that's going to be reporting this week. Well, I'll tell you about that in just a moment. Let's not get unfocused from this part. And I'll tell you about one stock that's not a stock many people would be looking at, but I'm really looking forward to watching their earnings this week.
That's my opinion.
Let me frame it this way. I'm advising caution here. So you mentioned Alphabet. What was the price response to Alphabet's earnings? Which I agree with you. The earnings was strong. The price response hasn't been anything spectacular. We're basically running in the same
That might be
place.
the judicial issue that's coming up with a judicial ruling in August. I'm not really going to disagree with you. I was pretty happy with Alphabet. It had a pretty strong run into the number.
No, but he's not talking. Hold on. He's not talking about the run into the number. He's talking about the run on the numbers.
Sure. Okay.
The move wasn't much of a move. I think that's the point that he's making.
He and I are in agreement that this is a market that's ready for a pause. I think that's the wrong idiosyncratic case to take. But why don't you keep going, because I want to hear where you're going.
If you look at it,
that's
it's not
a great
idiosyncratic. If you look at the move,
that's endemic of the
if you
market.
want to go the moves into the.
I mean, to be fair, Google's got this. They still got the whole question mark ChatGPT. Like Google came through with the numbers, they put them up again. Do that 2 more quarters, Google, and no one will be talking about you're done. ChatGPT ruined you can't do anything. They got 2 more quarters to put up. Come out with those. Everybody will be like, you got to buy Google stock.
Prince, my gosh, these stocks have crushed it over the last 3 months. Alphabet is one of the worst performers of the group over the last 3 months into the print, and it still didn't have a great reaction on the other side of it. I mean, Microsoft's up 31% in 3 months. Meta's up 31% over the same time period. Amazon's 25%, and then you start getting
we're violently agreeing that this is a tired market. We can phrase it any way we want. Tired, in need of a rest, exhausted, has climbed the wall of worry. This is a market that is due for a consolidation, not a correction, a consolidation. Joe, 5 to 7%, fine. In terms of the broadening, I do want to say this, all right? The equal weight S&P 500 is 1.7 percentage points away year to date from the S&P 500. And if you look back in 2024, 2023, it was close to 10 percentage points behind at this time each year. This is a market that has been broadening. Yes, it's true that mega cap has done very well, but if you look at a lot of other sectors, communications, industrials, financials, a lot of other sectors have done well, even materials of all things.
What you're talking about is how Google, Alphabet performed afterwards. That's endemic of the market. That's why we don't know what the substance of this trade agreement is with the EU. But if you'd gone
We don't know the substance, frankly, of many of the deals
of any of them, actually,
that have been announced. If anything, the most positive thing to come out of it is just taking that specific thing off the card.
Right. But my point is that if it had been 2-3 months ago, you would have seen the market have a much bigger move. So it's been endemic of the market. What's really the hallmark of this market is the pull through. So we pulled through on the earnings, and referencing your comments on the other mega cap performance. That's why I said earlier, unless you see something big one way or the other, the stocks aren't going to do much. So the market just anticipated all this, which goes to your conversation about the valuation levels. You need a lot more really, really good, unexpected news to get the market.
Well, Canaccord today says that value.
They'll bring up Tom Lee here in just a moment, which is interesting. But the stock, I'm looking really forward to their earnings. That's going to be reporting this week. And there's not going to be a lot of people looking at their earnings, but I can't wait. And it's actually coming up within 24 hours from now. You know who it is? Cheesecake Factory. And the reason I'm looking forward to cake, obviously, I'm a big shareholder of that company, and it's been a phenomenal stock, but it's been running so much that it's like, dang, can that stock keep running after earnings? That's one big question. But the main thing on the fundamental side is this quarter they're about to report, disastrous consumer sentiment. Everybody was talking about the tariffs. It was just so downbeat, right? The stock market was going down. Like, it was just such a negative quarter from a consumer's perspective that I'm really interested to see the numbers. Because if those numbers are actually pretty respectable in a quarter like that, with consumer sentiment as bad as it was, and everybody thinking like it was the end times, imagine what next quarter is going to be. Because it seems like the consumer is starting to come back very strong now at this point in time. Now that we've moved past the peak fear about tariffs and what that was going to mean for the economy and all those things.
Is the stickiest wicket in their words. It is the biggest headwind in this market. It's not earnings. It's not anything else. It is valuation. The earnings yield on the S&P 500 of 4.15% remains marginally below the 10-year at 4.38. And we note that this condition of a negative equity risk premium has not occurred since 2001.
Scott, we should not be expecting multiple expansion trading at 21 times calendar year 2026 estimates. What we should be looking for is those estimates to rise, which they have started to do. After going down all year, they are higher now than they were 3 months ago. Next year's earnings, $300 a share. That's the macro estimate, the aggregate estimate from FactSet. It was $298 just 3 months ago. And as the results keep coming in from the second quarter, I think we're going to see those full year estimates for next year creep up, where 21 is not the actual multiple that we're looking at.
I think you have to remember sentiment and positioning are in a much different place than they were 6 to 8 weeks ago, for sure. Sentiment is overtly bullish. Positioning is overtly bullish.
I don't know. Overtly is another questionable word. I mean, do you really feel that way? Tom Lee continues to come on the network and suggest this is still a hated V-shaped recovery. That institutional investors are not fully invested in the market. That's factual. But it's factual that it's factual that you still don't have full buy-in from institutional investors and hedge funds.
Hedge funds know, but hedge funds have missed everything. They're hedge funds because they're hedged, so they never. So rarely are they going to have exposure, net long exposure, 100% or 90%.
Sure, but I don't even know necessarily if long onlys have fully committed.
Long onlys aren't the asset allocators, so they've got to.
The point is that I would take issue with using the word overtly bullish. The feeling that I get and the people that we talk to is there's still a healthy dose of skepticism, not overt bullishness.
I don't know.
Boom, boom. And here's the thing. It's right in front of you. All three of those gentlemen sound skeptical, right? They don't sound necessarily bearish. None of those three, Short Hills Capital, other dude, they don't sound bearish. They don't sound like, oh, we're about to have a stock market crash, like, major correct. No. They just sound skeptical of where the market's headed from here. It's a tired market, blah, 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 which is a lot of the sentiment you get out there. So when Tom Lee talks about, a very hated bull market, I think this is what he's talking about. Like, it just seems like the whole time it hasn't had that feeling of euphoria yet in the market from the Wall Street side, right? It's coming, but it hasn't happened yet. Eventually, Wall Street's going to have that euphoric feeling. Maybe it happens, like I said, in the next 2 or 3 months here. That's when I get worried. Okay, so, alrighty, guys, appreciate you joining me as always. Thanks so much for being here on the Reaction channel. Once again, if you're looking to apply to our Private Stock Group, Private Wealth Group, that will be the pinned comment down there. You can click on that, fill out the form, see if we can get you access to that, get your Steel membership card for the private group, as well as get you in 1000xstocks.com and get your Steel membership card sent to your house for that as well. Let's get things up to a much higher level than where you're at. Much love and have a great day.